Well, folks, it finally happened. The stock market here today hit extreme fear. Yes, extreme fear. We barely clipped it, but we did clip it indeed. Lots to take you through in today's video. Some very strange things going on in the stock market right now that I got to show you, and in the financial markets in general. We got a ton of stocks to talk about in today's video. We got some opportunities to speak about in today's video, but I wanted to start at the top talking about this extreme fear that we just hit in the stock market. And I want to show you past data that essentially will show you when usually the market's about to bottom here, which is very interesting. So appreciate everybody joining me as always. Thank you so much for being here, folks. Thank you for being subscribed. I appreciate each and every one of you for showing up day in and day out as I do. So I appreciate y'all. Alrighty, so as I spoke about before, fear and greed index is something that is a very popular gauge out there that folks like to look at. It looks at a ton of different, like 7 different factors to kind of factor in, you know, if we're in a fearful market, a neutral market, a greed market, an extreme greed market, or an extreme fear market. Usually extreme greed markets, you kind of want to start taking maybe a little bit of a step back. You could maybe consider selling some positions that maybe, let's just call it, are flying high. Or you can just consider maybe not buying as heavily, right? Usually when you get into extreme fear markets, that's usually one of the best times to be a buyer of stocks, right? You ever hear the famous expression Warren Buffett says, buy when others are fearful and, be fearful when others are greedy, right? It's a famous expression for a reason. Now, let me show you this next chart, which is very interesting. This is going to show you over the past bit of time here, every time we hit a certain number, usually the market's about to bottom, which is very intriguing. So check this out here. This just looks at the past year, right? And check this out. Each time we hit about 25, so you hit that extreme fear, it was usually a huge, like, bottoming kind of signal, right? We hit this kind of like 25 range right around the SVB time, which was kind of scary. You had some of the regional banks collapse. It was around March, right? People got real fearful real fast and like, oh my gosh, this leads to systemic problems. This is a 2008 situation. And then the problems kind of cleared up, and obviously right there, that was a good buying the dip opportunity. Certainly back in October, November, look where we were hitting. We were hitting 20, 25 extreme fear back in that time frame, and that was right at the time when you saw all the growth stocks and tech stocks all bottoming. Listen to some of these stocks that bottomed during that time frame. Apple bottomed during that time. Microsoft bottomed during that time. Meta bottomed during that time. Shopify bottomed during that time. I could go through a long list. One of the only famous stocks that is a growth stock, tech stock, that didn't bottom then was Tesla. Tesla bottomed actually in January of 2023. It was around $101. That was the only stock I can think of the big name companies that didn't bottom in either October or kind of the beginning of November. Pretty much every single other stock out there, Intuit, Adobe, you can go through all the big dogs. They all bottomed right during that time. Check this out here. The mother of all trend lines. A friend sent me this over in a text here today, right? The chart everyone needs to see. We're either going to get a wicked bounce here or a wicked crash, no in between. And it's fascinating to kind of look at this chart over time here. And what this chart is basically going to tell you is likely we're going to get a pretty substantial bounce. But there's always a potential it goes the other way. So we'll see where all this shakes out here. But, the important thing to understand is, me personally, do I make any investment decisions based upon something like this? Like, oh, man, we're going to have a huge bounce, or, oh, boy, we're going to crash. For me personally, absolutely not. But the thing you got to understand, there's a lot of market participants that do. And a lot of market participants are going to look at something like that, or they're going to look at, 50-day moving averages, or 200-day moving averages, or 150-day moving averages, all these different things. They're going to make conclusions on whether they should buy up the market or sell the market, right? For instance, today was technically an oversold kind of reading going into today. So today should have told you like the market's going to bounce essentially, right? And so you just got to understand the algorithms are all programmed to read certain things certain ways. Traders are programmed to read certain things certain ways. So us fundamental folks, we kind of look at it and who cares? This trend line, that trend line, whatever. There's a lot of people that care about this, and so that's just important we understand that. Now, I can tell you what happened here today, because this is extremely suspicious, fishy, whatever you want to call it. Check this out here, okay? We have a phenomenon go on where the market just tanks and then it magically rises, right? But look at the difference in how the market sank through the trading day versus how the market came back. And what does that tell you? What this tells me right here, this is humans selling and making selling decisions. You see how orderly the sells are over time and kind of just the drops in the market. And then we kind of bottom out the market. And then what happens is not humans, okay? This is the machines taking over, okay? This is the machines taking over. Because then you just get this insane spike in a matter of 10 to 20 minute time frame there. And the market just skyrockets, right? And skyrockets again, and then obviously we kind of fall a little bit into the close, come back a little bit. But that's the difference between humans making selling decisions and the machine saying buy, buy, buy. I don't know if it's because we went under 13,000 that there were certain signals being sent. I don't know. But bottom line is, that's not humans there. That was clearly the machines, controlling the market and doing what they do, right? Now, Apple. We got to talk about Apple, okay? There's a lot going on with Apple, and there's a wall of worry that is starting to be built in a massive way around Apple, okay? This stock hit $169 here today. It's at a 3-month low, and it's really showing no signs of bottoming right now, right? Now, here's a problem, okay? You guys have seen, obviously, the FTC suit against Amazon, I'm sure now at this point in time, right? Obviously, you got a different department after Google right now, okay? Meta's already gone through their stuff over the past few years. So everybody's looking and starting to say, we know who's up next. We know who's up next. These guys right here. And do a lot of politicians own Apple stock? Absolutely. But at the end of the day, it seems like it's a matter of time. It's a tick, tick, tick situation between now and when the government's going to come down on Apple, okay? And so a lot of people are starting to look at this, and then you see what happens here today. Epic asks Supreme Court to take up its case against Apple. Video game company Epic Games asked the U.S. Supreme Court to review a lower court's ruling in its antitrust case against Apple, in which it alleges the iPhone maker engages in anti-competitive App Store practices. The tussle began in August of 2020, when Epic slipped into an alternative payment system into its popular Fortnite video game, violating Apple's App Store rules. In response, Apple kicked Fortnite out of the App Store, prompting Epic's lawsuit. Epic lost with one exception. A judge required Apple to allow developers to inform their users about the payment options outside of its App Store. But in August, the Supreme Court declined to end the stay that Apple was granted on the ruling. Now Epic is taking another stab in order to keep its case alive, right? And so, I can just tell you, there's very strong cases that could be made against Apple in terms of anti-competitiveness, in terms of monopolistic decisions that are being made there, and either on the consumer side or in terms of their App Store side. So I'm just telling you guys, the Wall Street's waking up now, and they're saying, if now that the FTC is coming after Amazon, I'm just telling you, I think you can make a much stronger case on several different fronts coming against Apple than you could actually coming against Amazon, okay? Now, the reason this matters so much for the market, obviously, is Apple's big dog, right? Apple is the biggest weighting of the S&P 500. It's over 7% weighting, right? So if we're talking about a situation where this becomes a reality and Apple tanks in a substantial way, it's going to hit the S&P 500 at least a little bit, right? It's going to hit when you got 7% of the weighting in the S&P 500, his Apple stock alone, it's going to hit the S&P. The Qs, this is even scarier if you're NASDAQ or Qs related, right? Apple makes up about 11% of the allocation there, right? So we're talking about this is quite a dilemma. Now, if we go ahead and take a peek, I put together Apple's wall of worry now, because there's this wall of worry that's kind of getting built brick by brick in regards to Apple here recently. And here's what the wall of worry looks like now for Apple. We've got business concerns with Apple, right? Apple's had their worst year for their business in a long, long time, like in many years, right? We got a business that the revenues are starting to go down, and that's concerning, right? We got valuation problems with Apple, where it's trading at very rich valuations based upon pretty much almost any time in the past 10, 15 years for Apple, right? Certainly in the past 10 years. We have China worries with Chinese government and some of the decisions that are being made there and the competitive landscape in China, right? We have worries about 2024 and what that could mean for the consumer, and if we have recession, if we have unemployment climb, and all those sorts of things, which is very concerning for Apple. And then now we just got a new brick, which is the U.S. government. Could the U.S. government come and crack down on Apple? And that's a real concern. If they're coming after Google and they're coming after Amazon, it seems like it's just a matter of time before they come down on Apple. They could come down on Microsoft as well. Microsoft's been engaged with the government in the past, and even in the Bill Gates days. That was one of the things that put Bill Gates into retirement. In my personal opinion, one of the reasons Bill Gates went into retirement was he had a deal with the government. This was back in, when was this? This was like late 90s, early 2000s, if I recall. Microsoft had a huge run-in with the U.S. government in terms of like monopolistic power, and that hurt their business for a long time, man. And so this is what we have going on now at this point in time, right? Now, in regards to kind of big tech, I was looking, man, PayPal just continues to be vicious. Alex Chris started his first day, I believe, at PayPal here today, which is exciting, but the stock wasn't in on the excitement. Tesla's still 40% plus off highs. This one fell as well today. We obviously spoke about Apple. Netflix, no bounce. You know, with everything that happened with obviously looking like the Hollywood strikes are going to become a thing of the past, you would think like, oh, Netflix has to bounce, right? Netflix continues to show no signs of bounce. And so it's a little worrisome. Meta here today hit $298. It did bounce back, obviously, at the end of the day to close at $297, but that one got hit a little bit, right? And Oracle just continues to be red. I mean, it seems like every day I talk, Oracle goes down and down and down. I'm hoping this baby goes under 100. I'm going to have to start at least a little position in Oracle if this baby goes under 100. All it takes is 1 or 2 bad days in the NASDAQ and Oracle's under 100. It's been vicious, right? But look at some of these stocks I almost never talk about on the channel. Look at how some of these stocks are performing. SJ Smuckers? Are you kidding me? Are you flipping my peanut butter and jelly sandwich? Like, what are we talking about here? JM Smuckers is down nearly 23% year to date. I mean, you know, when it comes to JM Smuckers, it's certainly not going to be the most exciting stock. You're not the type of stock you're expecting to double up your money in a few years or something like that, or triple up your money. But you also, if you invest in the SJ Smuckers, like you're not expecting to lose 23% of your value in a year, especially in a year where it's not like the stock market crashed. The S&P 500 is actually up this year. Like think about that for a moment, right? The S&P 500 is up this year, and yet SJ Smuckers is down nearly 23%. General Mills, the General, is down over 25% this year. Are you kidding me? For the General, like this is one of those stocks that you would usually expect to be the safest company. Like, yeah, if the market crashes, then I'm sure my General Mills. But outside of that, you never expect General Mills to lose a quarter of its value in a year. Come on, man. But that's what it's been like this is just crazy. Like, look at that drop from around $90 back in May to $64 here today, and it hasn't shown any signs of a bottom yet. That's the scariest part of this, right? The Kraft Heinz company has lost over 20% of its value year to date. The belief is, the thought process is, in regards to some of these stocks, you see General Mills down, you see SJ Smuckers down, you see Kraft Heinz down. The thought process is, okay, let's say we get into even a tougher economy, right? Where let's say the consumer gets hit even harder, and let's say we have a recession, unemployment climbs, the amount of people on food stamps and things like that goes up substantially. Well, the thought process is, people aren't going to be buying name brands, okay? They're not going to buy the General Mills cereal. They're going to buy the Malto meal or whatever, the other cereal that tastes horrible, okay? They'll buy that. They're not going to buy the name brand jelly. They're going to buy the off-brand jelly. They're not going to buy the brand name Kraft ketchup. They're going to buy, or not Kraft ketchup, Heinz ketchup. They're going to buy some off-brand ketchup because guess what? I'm going to save $1 buying that, and it probably tastes about the same as Heinz does, right? So that's the thought process in regards to these, and that's why these stocks are just getting absolutely clobbered right now. Plus, obviously, a lot of these companies are dividend payers, and people have just been moving money out of these dividend payers over to savings accounts or to treasuries in general, right? And so these stocks they're getting hit like the growth stocks got hit last year. I mean, you got to understand, folks. A lot of those great growth stocks, the Amazons, the Metas, all those stocks, they all fell 50% plus, right? For General Mills and Smuckers and Kraft Heinz, a 20 or 25% fall is like a 50% fall for these stocks. Because you buy Amazon or you buy Meta, you buy Tesla, you buy whatever. Like, it comes to almost an expectation of like, there's going to be some times where this stock's getting killed. Like, I'm going to go down 20, 30, 40, 50% on this stock. You just know that going in. There's no scenario where it only goes up. There's going to be some times where the stock gets clobbered. When you buy Kraft and SJ Smuckers and all, General Mills and Kellogg's, you're not thinking, oh, I'm going to lose 25% of my value. That's a pretty rare thing that's going to happen there. And so that's what we got going on in this market at this point in time, right? These are huge, insane falls for these stocks. Look at Clorox. Clorox company. Are we talking bleach here? 17% down in a month? No, come on, man. That's equivalent of Tesla being down 45% in a month. Literally. Clorox being down 17% is the equivalent of Tesla being down 45% in a month. You do not expect to lose 17% of the value in Clorox? What are we talking about? Come on, man. Dollar Tree has lost nearly 28% of its value this year. It's supposed to be, usually people will look at the dollar stores as like the safest retailers to buy for the most part, right? And this stock's flirting with go under 100. I mean, we get 1 or 2 bad days in SP 500. Dollar Tree's under 100. And that's just one of those stocks you never expect to be a risky retail stock. But the performance is like we're a risky retail stock at this point in time, right? Then on the flip side, you got Costco, which is close to all-time highs. You got to be kidding me. Close to all-time highs in Costco stock. That's extraordinary, right? But remember, Costco's customer base is very different than Dollar Tree. Dollar Tree's customer base can be somebody that's, barely making ends meet, and so they're looking to buy the least amount possible. They need 1 roll of toilet paper to get them through the next few days, okay? The person that goes in, that person might have an hourly job making, I don't know, $12 an hour or something like that, $14 an hour, right? The Costco member might be somebody that has a, $100,000 household income. They're doing okay for themselves. And so they choose to buy 30 rolls of toilet paper because it's cheaper on a per roll basis, right? And so it's a different consumer base, right? These folks pay a membership fee to get inside. Anybody can go in Dollar Tree and buy 1 roll of toilet paper or 1 roll of paper towels or something like that. So it's a very different clientele base, and that's what's going on there, right? Campbell's Soup has lost 27% of its value. How brutal is that, man? 27% for Campbell's Soup in a year? Crazy. I mean, these are just crazy numbers here. Campbell's Soup's been public since the 1960s, folks. The 1960s. If you were born before the 1960s, shout out to you, okay? If you were born before the 1960s, leave me a comment that says you were born. Don't even bother doing that, because I know damn well nobody born before the 1960s knows how to leave a comment, okay? So just don't even bother doing that. Watch, there's going to be like 100 comments down there. I was born before the 1960s. Oh, yeah, sure you were, okay? Sure you were. But that's what's going on here in regards to Campbell's Soup, right? Target hit $108. It was going to be another bloody day for Target, but they pulled out a little teeny gain here today, okay? And it was fascinating to me because people are they're talking about, Target has all this theft. They're closing stores, this and that, right? And then Costco, on their earnings call, they basically said, we're not seeing any substantial rises in shrink or theft or anything like that, right? And it led me to think like, well, does anybody think logically about this? Like, this shouldn't even be a question. You just think logically about this. Sometimes common sense is just so valuable, okay? So common sense can be so damn valuable in the market. Think about freaking Costco, okay? You need to show a membership card just to get in the door, okay? They're going to ask you for your membership card at the door. So they're going to get your membership card. You got to show them your membership card. If you don't, it's going to be a big problem. They're going to be following you all around the store. Where's your membership card? Blah, 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 okay? And then what are you going to steal? Everything's massive in there. You can't put anything in your pockets. So what are you going to grab a roll of 30 pack of paper towels and try to run out with that thing? Like, what are we talking about here? Like, come on, man. And there's only one entrance and exit to get out of the place, right? And it kind of funnels you in, and there's like a million other people with big, massive baskets in the way. Like, if I just think about one of the hardest stores to steal stuff from, it's Costco. And it's hard to even get through the lanes because they usually have all the lanes blocked off with carts as well, like if it's a lane that's closed. So I'm just telling you, it would not be easy, okay? It would not be easy if you want to jack stuff from Costco. So, like, I wish people just thought about these things logically. Like, of course, Costco's not going to have a major theft problem. Anything that's, like, smaller and high ticket, usually grab a little, like, tag thing, and then you take that up to the front, and then they'll grab it from you, like, actual gift cards or whatever it is, and they'll grab it from you, grab it for you from the back, right? It's a whole different experience. Target, on the other hand, Target has several different entrances and exits, usually 2 massive entrances and exits throughout the store. And also, Target's initiated a lot of these self-checkouts over the past few years. And these self-checkouts, I can tell you, it sounds smart at first because it's like, well, we're going to eliminate a ton of cashiers and the need for cashiers, and people can just ring up their own stuff. Problem is, you're going to have some people that are just dishonest, and they're just going to, didn't quite ring up that thing that's going in the bag, okay? Going to have that. You're also going to have some people that make honest mistakes, and they didn't plan to, not have that thing ring up properly, but it's not going to ring up properly. It's not going to be done as good as a cashier who does that for a living and who actually works for the company. I can tell you that. So that's one of those scenarios I look at, and I think that costs them money as well. And then no one checks receipts going out of Target. It's a whole different experience, right? So, that's kind of what's going on there. And as long as this theft thing's a problem, it's going to continue to probably be a problem for Target and any of these other retailers. But for Costco, it's just not. It's just not. I mean, if they start jacking stuff from Costco, T-bone steaks or something, that's going to be the day, okay? That'll be the day. That's when we know it's all hell's breaking loose at that point in time, okay? Dutch Bros. Look at this baby. 24% in the past month, this baby's down, okay? Another 2% plus today. It didn't bounce back with the market. Still trying to find a bottom in regards to this one. I shared my opinion with you guys in yesterday's video about Dutch Bros. I am looking to buy that one. And I mentioned specific prices I'm thinking about buying it at and I want to buy it at. And so if you didn't get to check out that whole segment, check out yesterday's video. I talked all about Bros in detail there. Nike stock, under 90 now, under 90. It's a 28% drop year to date, right? And this one's still showing no signs of a bottom, and earnings come out tomorrow. And here's what we're looking at. EPS is expected to be down over 18% for the company, but the company's expected to be growth and have growth in revenues for the next couple quarters. That worries me a little bit. I'm a little bit worried. I'm a little bit concerned about that because based upon the continued drop in Nike, I'm concerned, very concerned, that Wall Street knows something, and maybe they know that Nike's going to report negative numbers for either this quarter or next quarter. That's just my hunch. That's what I'm concerned about. Wall Street usually knows something. I've just found that time and time again, right? And so I'm very concerned about them. And so what I'm hoping happens is I hope they either have a bad earnings or bad guidance, and we just get one last flush of kind of Nike stock, right? And we lose the 5-year gain on the stock. This stock's up 5.7% in the past 5 years. It would be, I think, a welcome sign to just lose that gains, and then you're negative on a 5-year basis. So we'll see what happens with Nike. I'm not super optimistic going in, and I honestly am more hopeful because it's kind of a newer stock I've just started buying here, and I want to buy a lot more shares over the next 6 to 12 months. If anything, I would rather go down short term. So that's my hope. We'll see what happens there, but very intriguing, right? And a similar phenomenon happened to, obviously, Foot Locker. Foot Locker had their last earnings, and that was just that one last massive flush. It dropped all the way below $15 in that flush. So hoping for something similar in Nike, and maybe it drops to, I don't know, $82, $84, $79, something like that in these earnings. We'll see what happens. I don't want to get my hopes up too much. But I don't know if you guys have seen something like this, right? Nike Air Jordan cachet tumbles on his resale market. Is the sneaker culture moving on, right? Data from analytics firm Alton Insights shows the value of some Jordan shoes have been slipping on the resale market as other sneaker brands, including running, experience meteoric growth. On the resale platform StockX, the average premium paid for the new releases of Nike's Air Jordan 1 Retro High, long considered the quintessential collector's shoe, has slipped from a high of 61% in 2020 to 4% in 2023, right? And so here's what I'll say about this, okay? Is there something wrong with Nike? Are they screwed or something like that long term? The answer to that is absolutely not, okay? The bottom line is inflation has hit people hard the past couple years. And, it's starting to catch up with everybody, okay? And the bottom line is when it comes to, these Jordans and the resale market and everything like that, it's a lot of teens, it's a lot of people in their 20s, it's a lot of people with like 30K to 60K a year type incomes. And guess who's been hit the hardest by inflation? Guess who, I'm sure there's a lot of people in LA that love to be, sneakerheads, and they love to buy all these resale shoes and whatnot. These people are paying $6 to $7 a gallon for gas right now. You just can't, you don't have the money to pay an extra $200 or $300 for a new pair of Jordans right now. It's just not realistic, okay? Not in the environment we're in right now. It might be in a couple of years from now, but it's just not today, okay? It's not that time period. And, we've even seen some kind of weakness in the high-end market, which is fascinating because we haven't even really seen the stock market get hit that hard this year. Certainly, if anything, it's been a pretty good year. We haven't really seen real estate get hit that hard, but Rolex and Pateks, their prices are falling to new 2-year lows in the secondary market, and this was news that came out a couple months ago. And believe me, if real estate falls, if we have any sort of major white-collar jobs get lost, and certainly if the stock market and crypto falls again, believe me, Rolex prices, Patek prices, all those high-end watches, they'll fall considerably in the second-hand market, okay? And once those really fall hard, that will be a good sign that we've kind of finally got that complete bottoming out of everything at that point in time. So this is just a phenomenon going on. I don't think it says anything about the brands. It just says more about inflation, just to be quite frank, and how bad that's really hurt folks, right? Weird. Very weird. I looked at my best performing stocks today, and all of my best performing stocks today were all be seen as riskier stocks, right? Fubo was my best performing stock here today, right? I mean, their Google Trends data is insane, and they must be tracking so many subscribers. It's ridiculous right now, and so that's great, but Fubo is still a money-losing company. It's still put in the riskier category. Palantir, I think it's not super risky, but it's put into the category of super risky stocks. That was my second best performing stock here today. Wynn Resorts is seen as risky right now because of the fear of recession and all those sorts of things. So that's a stock that was very green today. Elf on a Shelf is seen as risky just because of its high valuation, right? It's got super high growth rates, but it also has a super high valuation. And then Honest is certainly seen as a riskier company in general, right? So that was just weird to kind of see like my riskiest stocks like performing the best today. Interesting. MetaQuest 3 got shown off here today. MetaQuest 3 is sharper, more powerful, and still trying to make mixed reality happen. So this is very exciting. We're going to hear a lot of reviews out of MetaQuest 3 over the next, I would say month or two. I just tried the MetaQuest 3, and it's the VR headset I've always wanted. It's coming in at a $499 price point, which is beautiful because with Apple coming in at, I mean, geez, what was it, $3,500 price point before tax and everything else? I mean, Meta coming in at $499 with their headset, right? It just puts like the bar so low for them because of price point, and then it's going to be such a phenomenal product. This is their third iteration of this, right? So it's going to be by far and away the best they've ever done in every way possible. And so I think it's going to get glowing reviews, and I think the sales are going to be really strong, even though we're not in a super strong environment for really electronic sales right now. I pre-ordered mine on Amazon. I just did it, man. I was like, I can't wait to get my hands on this. I bought the Quest 2. I thought it was okay. I thought there was a lot of work they could do, and so I'm really looking forward to this Quest 3 because I think it's going to be obviously a much, much better device than anything, Quest 2 was. Now, in regards to stock in general, right, it's my biggest position in the public account. Does this change anything for me? I don't think it changes anything for the company fundamentals, the financials very much. Meta is such a massive company, they're going to need to sell a ridiculous amount of these Quest 3s to have it really impact in a substantial way the top line, bottom line. Okay, bottom line. Okay, but what I will say, if Quest 3 is a big success, and big success I mean it sells obviously quite a bit more than Quest 2 did, I will say it is a huge thing for the stock price. And the reason it's a huge thing for the stock price is everybody sees how much Zuckerberg's been spending on, obviously, VR, AR, the metaverse, everything like that, right? And people want to see some sort of comeback. Like, how are we going to make some money off this? And so if Quest 3 can be a real success, that gives Zuckerberg some more leeway for all these folks that are kind of naysayers or on the sideline, like I'm not buying Meta stock until they start cutting their VR and AR and metaverse spending. If this can be a success, a lot of those folks say, okay, maybe he's got something here. Maybe Zuckerberg has got something here, okay? So that's just my belief on it. I think it's going to be a very large success, and I think it's going to be huge for the stock price, but I don't think it's going to be huge necessarily for the financials of the company. It'll matter a little bit, but I don't think it's like a game changer, like, oh my gosh, this changes everything for Meta, okay? Now, Micron reported after the bell, and so the company topped estimates. It was interesting, their earnings though. Micron reported revenue of just over $4 billion. That was down 40% from a year ago quarter. Oh my gosh. With an adjusted loss of $1.07 and a loss under generally accepted accounting principles, GAAP basis, of $1.31. Now, the reason that matters so much is a lot of Micron bulls have kind of taken the position over the past few years of like Micron is not going to report any, losses, they're going to be profitable from here on out. And that case just went away. Okay, they're losing money literally now at this point in time, right? Now, guidance for the November quarter, Micron sees revenue of $4.4 billion, give or take $200 million, which is above the old Wall Street estimate of $4.2 billion. The company sees non-GAAP loss for the quarter of $1.07, a few pennies wider than the consensus forecast of $1.04. So that's not good. To see a loss in that quarter is not good. Micron sees calendar 2023 DRAM bit demand growing in the mid-single digits. For NAND, the company now sees growth in the high teens, up from the previous forecast in the high single digits, reflecting strength in some consumer end markets. Micron chief business officer said in an interview with Barron's that the quarter should mark a bottom for the recent down cycle, so which is some good news, okay? And so hopefully Micron's business should start to see recovery in 2024. We'll see what quarter it really starts to see recovery, but it should start to see recovery. So I thought it was a little bit of a mixed bag quarter. I think it's really depressing to see that company losing money again, because a lot of people really thought this company would never lose money again and they were just going to stay profitable, and they're just proven like, no, we're back to taking losses again. That's tough, man. That's tough. Now, as far as me personally, okay, so what I'm doing right now in the market is, one, I'm buying the beaten down good companies, which there's a lot of them right now. I just wrote down some examples of some of these stocks I'm buying right now. Wynn, Target, WBA, Nike, Foot Locker. there's just a lot of these stocks. They're just historically great companies. They're going to continue to be great companies. They're not great stocks right now. They're down and out. People are kicking them. They want no piece of these, just as they want no piece of Meta and Tesla. Everybody was calling Meta and Tesla and Shopify and Apple and Microsoft garbage companies last year when those stocks were falling, right? And I saw it and now people oh my gosh, these are the greatest stocks ever. And now people are treating these stocks like they're the biggest piece of trash companies in the world. I'm just telling you, they're not. And they're going to be highly relevant in the future, and they're going to put up much better numbers, and they're going to, their stock prices will perform in future years. But they're just beating down dogs right now. So I'm adding a lot of those stocks. I'm obviously staying hedged for 2024 because you got to be ready for whatever type of situation. There's a range of outcomes that can happen, obviously, in 24. So I'm going to make sure I'm staying hedged going into that year because, there's certainly a lot of different scenarios that can play out. And so that's what I'm up to. Hey, I know a lot of you guys have not taken advantage of these 2 workshops yet, so make sure you take advantage of these here today, okay? They're both going to be pinned comment down there. One's Investing Foundations. It's a good workshop if you're in your first 3 years of investing. It has five different days. I send you a video that goes over so many different important stocks. Check it out there, guys, okay? Look at that. I mean, those are valuable videos. And then this one's a little bit of a shorter workshop. It's about a 30-minute video, 30-minute video. This workshop goes into how I find 10x stocks, and that's also pinned comment down there. So, yeah, make sure you take advantage of those here today if you have not taken advantage of those yet. Much love and have a great day.